France's prime minister warns of a moment of truth with the government facing collapse as early as tomorrow. China bans several materials crucial to chip making from being exported to the U.S. in a tit-for-tat move that President Biden's government escalated tech curbs on Beijing. Plus, a Bloomberg scoop, a share offer by Elon Musk's SpaceX sees the startup's value rocket to about $350 billion. Also in the show, our conversation with the NASDAQ president, Tal Cohen. I'm looking forward to that interview. We talk IPO demand, we talk financial crimes, and of course how the exchange is also embracing AI. That interview coming up at 9:30 London time. Now, let's take a look at the European markets map. A lot of the focus is, of course, on tariffs. A lot of the focus is still on everything that happens with France. Now, I'm looking at European stocks. They're giving a bit of a lift. Certainly, they've been under pressure over the last 3 to 4 trading sessions. The CAC 40 at the moment gaining 1%. The FTSE getting some 0.6%. We also are going into the holiday season, so a lot of focus on retailers, but also some of the luxury spending that we've seen in some of the numbers. LVMH was under pressure today, not having a bad day at all. S&P futures practically unchanged. Euro dollar, that's the big one, as we see if the government over in France falls or not. And then, of course, I'm always looking at treasuries. The 10-year 42090. Again, they slipped a touch. The dollar a little changed. Oil also climbing ahead of that OPEC plus meeting on Thursday. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Prime Minister of France, Michel Barnier, says his country has reached its moment of truth. This, as far-right leader Marine Le Pen pledges to join a left-wing coalition in toppling the government. Now, this comes after the Prime Minister Barnier invoked a constitutional mechanism to adopt a social security bill without a vote.
This bill is now here. Now is the time to act to implement it. I believe we've now reached a moment of truth which confronts everyone with their responsibilities. It's now up to you, members of the Parliament of the nation, to decide whether our country adopts responsible financial texts, essential and useful to our fellow citizens.
Let's get more from Bloomberg's Caroline Conan, who's in Paris. Caroline, is the Barnier government really living their last few hours?
It's very likely, Francine, and in fact, the chances of a government collapse as soon as Wednesday night are very high, given the National Rally has already said that they will support the motion of no confidence proposed by the far left, France Unbowed. This motion will be examined at the National Assembly either Wednesday night or Thursday morning, and clearly this means that the Barnier government will be, or is likely to be, the shortest lived Prime Minister in the Fifth Republic. We knew he was going to face a vote of no confidence at some point. We didn't know it was going to come so soon on this social security part of the budget, and until the last minute on Monday afternoon, Michel Barnier tried to give some concessions to Marine Le Pen, including at the very last minute on drug reimbursement, but that wasn't enough. Marine Le Pen wanted more. She also wanted all pensions raised as soon as January. The amendment came too late, couldn't be included in the bill, so Michel Barnier had no choice but to provoke this vote of no confidence. Now, he's going to speak on the 8 o'clock news tonight in France, on France 2 and TF1. We'll see, obviously, he's going to call for responsibility, this moment of truth, as he mentioned. We'll see if he's also reaching out to the Socialist Party, because if there is 44 Socialist MP abstaining, then he might have a tiny chance to survive. But obviously, that's a very big gamble.
Caroline, what happens next if the government then is toppled this week?
So then, of course, Emmanuel Macron, the president, is going to have to name a new prime minister. Michel Barnier's government will remain as a caretaker until that new prime minister is named. And remember last time after the snap elections in July, Macron actually took 2 months to choose a prime minister, given no matter what, there is no majority in parliament. He cannot call a new snap elections until at least July 2025. So there is not much way out apart, again, from reaching out to the socialists to perhaps try a center-left prime minister this time around. And you know, it's very ironic because Emmanuel Macron, as we speak, is actually in Riyadh in Saudi Arabia on a state visit with some ministers, including the foreign ministers. For example, he's going to come back tomorrow and most of these ministers may be out of a job by then.
Caroline, thank you so much, of course, for the great insight, great reporting on the ground. Of course, Caroline had the first international interview also with the finance minister of France on Sunday. Now, to talk about the risk out there, not only in Europe, also in the U.S., we're joined by Mark Haefele, Chief Investment Officer of Global Wealth Management at UBS. Mark, when a government's about to fall, we call them the big guns. And how should we view risk right now in France and elsewhere in Europe?
Well, you know, I think that if you look at France, what's so interesting from the stock market perspective is the stock market isn't really pricing this in at all. And I think that speaks maybe to, number one, the way that the stock market isn't necessarily good at pricing in acute political risk. Also, the stock market kind of thinks if you're a globally integrated economy, maybe with less than 70 million people, you're eventually going to do the right thing. But it also speaks to how, you know, over the longer term, the issues in Europe are weighing on growth. And we're seeing that play out in the market, say, versus the United States as well.
So what does it mean in terms of how you build risk? If we do have a toppling of the French government, I mean, could it actually spill over to bonds more than we've seen so far? Are we looking back at crisis levels, or do we now have the mechanisms in place that, you know, by and large, the market will be okay, Mark?
Yeah, I think that the market is, you know, this is not going to be something like a Euro crisis yet for a variety of reasons, including the fact that, you know, we're talking about France maybe and not something that was at the time called the periphery. But it speaks to the ongoing problems of growth, debt, population that have been this drag on Europe. For us, you know, we've been more overweight in the United States, where we see better growth dynamics and political dynamics.
When you talk about political dynamics, so you have your global outlook, year ahead 2025, and you basically talk about, you know, U.S. political change, that's going to have a lot of changing dynamics, especially for Europe. Falling interest rates, you talk about transformational innovation, artificial intelligence, power and resources. I mean, does a Trump presidency change everything for stocks?
I don't think it changes everything. It does change the way we need to, you know, we all have to remember that you wake up to a tweet and that's a major source of news going forward. So it changes some things. But I think, and of course, we don't know yet exactly how all of the tariff and immigration policies are going to play out. But I think the broader forces that we think are going to continue there's a bias on the Fed and other central banks to keep cutting rates. In fact, we think it's getting closer to a push, but we think that the Fed will cut rates and that, you know, inflation is not going back up in the near term. So that's a backdrop that helps equities, it helps risk assets at a time where the consumer, especially the U.S. consumer, is holding up relatively well. So we have a outlook where we think in our base case, say the S&P 500 could gain about 10% next year, not based on further multiple expansion, but just based on earnings growth.
Mark, I want to ask about the Fed in December, but first we also heard from Christopher Waller, of course, from the Fed, saying he's leaning towards a cut for December. Here he is.
At present, I lean towards supporting a cut to the policy rate at our December meeting. But that decision will depend on whether data that we receive before then surprises to the upside and alters my forecast for the path of inflation.
Mark, how brave do you have to be to front load, cuts, extra cuts before tariffs are introduced that will push up inflation?
Well, I think that the market still expects that the Fed will cut rates. We'll see when the employment data comes through on Friday, how brave you have to be. But I think the bias is still there, and the market is saying, look, there's still room to do that given the overall picture. I think one of the things we look at with inflation is the longer term picture around this owner's equivalent rent, and that's going to be a force that is going to help keep inflation in check going forward. So we think there is some justification to believe they can get in another rate cut here.
All right, Mark, thank you so much. Mark Hefele there from UBS Global Wealth Management stays with us. We'll talk about treasuries next. Coming up, the U.S. president-elect also plans to travel to Paris on Sunday, arriving at a tense time in French politics. We'll discuss Donald Trump's foreign and domestic priorities next. This is Bloomberg. President-elect Donald Trump plans to travel to Paris on Saturday to attend the reopening of the Cathedral of Notre Dame in his first foreign visit since winning the election. Meanwhile, domestically, Donald Trump is under pressure over the nomination of Pete Hegseth as defense secretary after reported allegations of personal and financial misconduct by Hegseth coming to light. Now, for more on all of this, let's bring in Bloomberg senior writer Stephanie Baker. Stephanie, there's a lot to talk about the nominations. I know there's question marks over the education secretary that he's put forward. But first, in his first trip since being elected, Donald Trump goes to Paris for the reopening of Notre Dame. Is that because of the personal relationship he also fosters with Emmanuel Macron?
Right. Well, they had a bit of a love-hate relationship during Trump's first term. They were very friendly for a period and then openly hostile. I think Macron will be eager to meet with Trump as he is in the middle of a political crisis at home and a political challenge from the far right. It also comes as Trump has just revealed he is nominating his daughter's father-in-law, Charles Kushner, as U.S. ambassador to France. Now, Charles Kushner was convicted of tax evasion. Trump pardoned him in his first term. This is a plum position. Clearly, France is definitely top of his agenda as well.
Does it also get him away from the U.S.? How much political backlash is there for some of these nominations? We're speaking about Hegseth, who was on Fox, very controversial given some of the allegations that have come to light. But also, most of his nominations have question marks around them.
Right. Well, Pete Hegseth is in the middle of a storm because of a New Yorker profile which details a previously undisclosed whistleblower report from a nonprofit for veterans that he ran. And the whistleblower report says that he was repeatedly intoxicated, and oversaw financial mismanagement of the organization, driving it to the verge of bankruptcy. And I think that only piles pressure on senators to really investigate Pete Hegseth. And I think it raises questions as to whether or not he may suffer the same fate as Matt Gaetz, Trump's pick to be Attorney General, when Republican senators just called Trump into the room and said, this is just not going to pass, this is not going to fly.
Stephanie, what's your take on Joe Biden's pardon of his son? Again, a lot of people say, well, this, the moral high ground that the Democrats could have taken now is gone. And it also means that the Trump camp can attack the Democrats and really pardon now whoever they want.
Yeah, the problem is that Joe Biden had said repeatedly that he would not do this, that he would not pardon Hunter Biden. And instead, he rolls this out as one single pardon, not as part of a group of pardons that presidents often do before they leave office. And I think it really does raise questions and kind of equates Trump and Biden in terms of the politicization of the Justice Department. Joe Biden, of course, is facing a different situation. Trump has picked various figures to run the Attorney General's office, the Justice Department, as well as the FBI, that have vowed revenge on political enemies. So I think there was concern that Biden had that they could go after his son again. And some of the charges against Hunter Biden are things that would probably have not been prosecuted as aggressively if he had not been the president's son. So on one level, it's understandable, but I think it only raises the risk of Trump pardoning a wider range of people that were prosecuted and in jail for the January 6th attack. And I think that's one of the biggest fallouts from that move.
Stephanie, thanks so much. Our senior writer there, Stephanie Baker. You can follow everything she writes, and also she has a new book out on how Vladimir Putin changed the Russian economy to go to war. Now, let's go back to Mark Haefele, Chief Investment Officer for Global Wealth Management at UBS. Mark, I mean, going back to some of the Trump policies, we don't know when they'll come, although he seems to be moving pretty fast. We don't exactly know what they will be, but what do they mean for dollar?
Well, we've seen a real strengthening of the dollar as people think, a couple things. One is that the policy will be oriented around more home shoring, so more investment into the United States. Maybe also there could be some extra risk in the policy and volatility, and that speaks to dollar safety. But it's also the market making some estimation of better growth in the United States as well. Now, we think that the dollar has moved quite a bit, and we would be looking to kind of exit the dollar should it spike higher or something like that, and look at other currencies as well from here.
But Mark, I mean, I guess the wisdom at the moment is that some of these. I mean, there's a belief in the markets, and correct me if I'm wrong, that actually whatever Donald Trump puts in place, he'll be looking at the market. So the bond vigilantes will keep him in check. I mean, is there a real danger that actually inflation skyrockets, and the Fed kind of doesn't really have the ability to do much about it?
Well, I think that all the people that have worked closely with Donald Trump have said all along, he does look at, you're right, he looks at the market, but if he's looking at the market, he's also looking at the inflation picture. And the single biggest factor, perhaps, that led to the disapproval ratings of President Biden had to do around inflation. And so I think inflation is part of that market picture. And, there's a lot of, I think the political noise around the picks and things is important, and we can have views on that. But I think what the market focused on in the Trump appointments was the top three candidates for Treasury are all very well known to the market, very well respected. And the choice of Scott Bessent was very heartening for market participants around the world.
Mark, thank you so much. Mark Haefele there, Chief Investment Officer of Global Wealth Management at UBS. Now, coming up, SpaceX's valuation takes off, how the world's biggest startup just got bigger. More on our Bloomberg Scoop next. And then coming up a little bit later in the show, all exclusive conversation with the NASDAQ president, Tal Cohen. This is Bloomberg. Welcome back, everyone. Big breaking news from France as it's facing its moment of truth. The government could collapse as soon as this week. We've now been confirmed, or we've been told, that France will hold a no confidence vote on the government tomorrow, Wednesday. Now, in other news, Bloomberg understands that SpaceX is in discussion to sell insider shares, valuing the company at around $350 billion. Now, that figure would be a significant premium to a previously mulled valuation of $255 billion, cementing Elon Musk's rocket and satellite company as the most valuable private startup in the world. Now, let's get more with Bloomberg's Tom McKenzie. I mean, Tom, you look at SpaceX. I mean, the valuation is insane.
Yeah, so as you say, from $255 billion in terms of the valuation just a month ago to a little over $350 billion right now. Again, according to sources, it's a secondary offering or a tender that allows employees of the business and early investors to exit, basically, and create some liquidity and get some gains on the back of that. It could still change, of course, but it's a reminder of the value now of Musk's assets, whether it's Tesla, whether it's SpaceX, particularly on the back of November the 5th and the election. So we'll see what comes to pass. But again, as you said, the most valuable private company right now in the world with a valuation, a ticket of around $350 billion US.
I mean, the impossible question, how much is that because of the friendship with Donald Trump? But we can't put a number on that. What we can put a number on is a payout that Elon Musk is getting from Tesla.
And that ties to, and what you can put a number on is the performance of Tesla stock since November the 5th. So gain of 40%, more than 40% Tesla stock up since November the 5th. And the pay package awarded in 2018 was linked to stock options in Tesla back in 2018, valued at about $2.6 billion then, now valued at over $100 billion US as of the close yesterday. But the Delaware judge has once again nixed this compensation package, which would be the biggest compensation package in history for a corporate executive in the US. It's the second time she's come out with this ruling since January. After January, they had a shareholder vote at Tesla. They all said, get on board, we want the pay package. Musk brought it back to that Delaware judge, but she's ruled against it again. Tesla says, and the shareholders say, they will appeal and go to the Delaware Supreme Court.
So interesting, Tom. Thank you so much. As always, Tom McKenzie there with the very latest on, well, Elon Musk. Coming up, our conversation with the NASDAQ president, Tal Cohen. We talk IPO demand. We also talk about how the exchange is embracing AI. That's next, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top headlines. French lawmakers will hold a no-confidence vote on Wednesday, with far-right leader Marine Le Pen expected to join forces with a left-wing coalition to topple the government. China bans several materials crucial to chip making from being exported to the U.S. in a tit-for-tat move after President Biden's government escalated tech curbs on Beijing. Plus, a Bloomberg scoop, a share offer by Elon Musk's SpaceX sees the value of the company rocket to about $350 billion. Now, on to other news, and the U.S. IPO market is showing signs of revival compared to last year. Now, participants also hope incoming President Trump's promise to cut red tape could encourage more companies to go public as soon as next year. Now, the tech-heavy NASDAQ has also seen more IPO activity, and it comes as the exchange continues to position itself as a financial tech firm. For more, let's discuss all of this with the NASDAQ president, Tal Cohen. Tal, first of all, thank you so much for coming back on The Pulse. Welcome to London. There's a lot going on. I mean, you see the ever-changing landscape. You see animal spirits maybe being lifted around the world. How do you see risks growing, and how can you take advantage of some of this, different environment out there?
Yeah, so you started out with the IPO backdrop. Let's start there. So in 2024, we welcomed about 150 IPOs, strong win rate of 75%, largest IPO of the year in Lineage, and some notable switches as well, such as Palantir and Campbell's, which is our 500. As we look to 2025, we see a couple of things. One is a constructive backdrop. The economy is strong. Earnings were strong. And then from the perspective of a backlog, we're seeing a larger backlog today than at the same time last year. So that's all constructive. And we also have this proprietary IPO Pulse Index that we've created. So we look at valuation, volatility, and interest rates. And that all suggests, again, a more constructive 2025. Now, from the exchange perspective, we're very interested in making sure that the markets are well-functioning, resilient, and that we uphold investor confidence. And nothing we've seen so far is diminished our expectations that we'll be able to manage that cleanly.
But, I mean, it's very clear that, for example, if you look at London's IPO market, I mean, it's losing out to New York. So I don't know if you have advice, or why do you think you're winning these, even from some homegrown UK companies that would rather list on the other side of the pond?
Yes, and we operate businesses in Europe and the Nordics and the Baltics, as you know. And so we want to, as I said last time we were together, we want to be part of the solution in Europe. And we identified a few areas in which we can aid and provide blueprints. And so when we look at the complexity of Europe, potentially the excess fragmentation that we see in Europe, there's two things that come to mind. One is, how can we make it deeper, more liquid, the markets deeper, more liquids? We look at Sweden. We've talked about the legal framework, a more constructive regulatory and tax framework, but we also talked about cultural and educational pieces of it, where pension funds and retail investors really support small and medium growth companies in Sweden. So that's one. The second is in the Baltics, we consolidated our CSDs, one platform, one rule book, allows for operational efficiencies and frees up capital. That's what we'd like to talk to Europe about.
But Tal, is there a concern that in the immediate, short term, it's the U.S. that wins also because of a Trump victory that could deregulate, put policy, and actually attract more capital deployment over there?
So we don't know what the new administration is going to bring just yet, but we hope it is pro-growth, we hope it is pro-innovation, and we hope it is pro-smart regulation. And if all those hold, then we'll continue to see a very constructive backdrop in the U.S., but it's also because the economy is healthy in the U.S. So nothing makes up for a strong economy, and so earnings this past earnings season were pretty strong. Companies, again, have shown really to be constructive, labor markets tightening, interest rates pretty manageable, but we'll see what happens in 2025 when he comes into office.
Tal, it's been about a year since NASDAQ closed the deal to buy Adenza. How's that going?
Thank you for asking. It's been just about a year since we closed our deal. Now we serve 3,500 institutions globally through our financial technology division. Our capital market solutions provide full trade life cycle solutions. Our regulatory technology and financial crime technology divisions provide solutions that protect brands and reputations of the firms that we serve. We're doing a really good job in integrating that, serving our clients. We're helping them with their largest problems, which is complexity, managing risk, the explosion of regulatory reforms and costs, and then, of course, helping them transform and modernize. And that's where they need trusted partners, and that's the role that we hope to fill.
How have financial crimes actually changed? Are they more difficult to spot or difficult to, has it been a big game changer, or is it still through phishing and things like that?
That's a great question. Let's frame the problem. Financial crime, $3.1 trillion in money laundering, $500 billion in fraud. It's a real drain on the economy. It's incredible. And these are real-world problems. It's financing terrorism, elderly abuse, human trafficking. And so one institution or a single institution is not going to be able to solve it on their own. We need a private-public partnership, and that's what we've been talking to our clients about. And that's why we want to bring Verafin, our financial crime solution, into Europe. And Verafin, born in the cloud, it takes advantage of large data sets and applies statistical analytics to detect patterns in financial crime and fraud so we can lower false positives, increase the rate of finding real fraud. And that is going to be of real value.
Talk to me a little bit about the crypto market. Would you be interested in getting into the crypto market under the new U.S. administration? Does it change everything?
Great question. We're already in the crypto market, and the way that we are is through providing institutional-grade technology, trading, surveillance, post-trade, custody technology. And by the way, we have 3,500 institutions, so that spans the life cycle of, if you will, crypto and non-crypto. Our stance, though, hasn't changed. We'll do a couple things. Provide that technology, advocate for public policy change that we think balances, if you will, innovation and investor protection. We power new markets through crypto technology. So for carbon markets, we provide tokenization technology for issuance and settlement. And then finally, we launched the first options contract on BTC just a few weeks ago, IBIT, and that's been incredible. So we're helping in a number of ways.
But, I mean, would you consider pursuing the crypto custody again? This is a business that you entered and then kind of retrenched from.
I don't think our analysis or calculus has changed on that. To be an institutional custodian, it's really capital intensive. While I think there's going to be more certainty in legislation that comes out, we're really happy with the approach and strategy we have.
I know you've fully integrated parts of AI, of course, in your business. What's left to do?
Well, there's a lot left to do. 2024 has been the year of activation for us. 25 will be the year of impact for us at NASDAQ. We embrace all forms of AI, algorithmic and Gen AI. We have about 20 AI-enabled products, and at any point in time, we have about 50 POCs that we're conducting across NASDAQ, and we just frame it in two ways. One is in the product, where we're looking at alpha and helping manage risk for our clients, and then on the business, where we're thinking about productivity and customer experience. So that's how we frame it. That's and our North Star has always been for our markets. It's been resilience and integrity, and for our financial technology business, it's just fueling our client success.
Does that mean you need to buy, other technology to put in those places?
I think we're very happy with the technology assets we have. And with respect to AI, again, we are partnering with the likes of AWS so that we have optionality in looking at the different foundational models, looking across the landscape to see what fits the use cases we have for AI. And I think one very important point that gets maybe not overstated is governance. Okay. So we've put in governance in place. Yeah. It acts as both a guardrail and a lubricant for us as we think about new ideas. And the thing we're really, really focused on these days is upskilling our employees, training and educating our employees, putting the tools in the hands of our employees so they're on that journey with us. That's the investment we're making.
And is that across the board? So European exchanges and the U.S., or does the U.S. have, are they further ahead? That adoption.
Oh, adoption of AI?
Yeah.
So NASDAQ's actually the first exchange to have a regulator approve an AI order type. We did that last year. And I would say that the U.S. is pretty far along. If I compared it to other parts of the world where we do see a lot of AI adoption, it is in Southeast Asia, India, Latin America really stand out to me in terms of accelerating their adoption of AI. I think in Europe we're seeing regulation, smart regulation come in place. It's a matter of how people implement that regulation.
Tal, let me ask you a little bit about the London market. We're seeing a huge interest in trading on secondary markets in London. What do you think is driving that?
There's probably a host of macroeconomic factors that are driving that, from the desire to make sure that they position themselves. Yeah. There's talk of tariffs in the U.S. There's talk of trade wars. They're talking about a number of different things that make the future uncertain. So I think we're seeing a lot of hedging, a lot of risk management taking place in those markets. And that's healthy for the markets. It's good that we have those markets. It's good that those markets operate well so they can help investors mitigate risk.
But does it also mean, does it almost automatically mean that actually there are less IPOs because of that?
It doesn't.
Or not necessarily?
Yeah, it does. I'm not sure that it translates that way. For us, I think, again, what's going to drive the IPO market for us as we look at it is, are valuations healthy? Is volatility manageable? Is there an understanding of the economic backdrop in terms of interest rates? And again, I think that's pretty well behaved at this point. So we are pretty constructive in the beginning of 2025 and throughout 2025. But we do have these geopolitical risks that we need to think about. And so that's probably, there's a couple of unknowns that might impact the market.
Is that your biggest challenge, Trey?
Oh, so we focus on the things we can control. The things we can't control, we'll make sure that our markets are resilient and that we're paying attention to security. But the things that we can't control and things that I worry about, keep me up at night, are really talent management, upskilling our employees, for all of the disruption that you and I just spoke about. I want to make sure that we bring our employee base with us as we take this journey into AI and this more disruptive landscape in the years ahead.
Tal, thank you so much for joining us. Always such an interesting conversation having you here. Tal Cohen, they're the president of NASDAQ, for an exclusive conversation here in London. Now, coming up, we'll talk plenty more, of course, on the markets, but we also need to look at NATO. Now, foreign ministers are meeting in Brussels for 2 days of talks with Ukraine high on the agenda. These are live pictures of the NATO Secretary General Mark Rutte addressing the media ahead of those talks. So there's quite a lot to talk about. The NATO chief warning Donald Trump is a dire threat to the U.S. if Ukraine is pushed into a bad peace deal. So we'll have plenty more of the geopolitics of everything we're living through. This is Bloomberg. Well, Georgia's prime minister is rejecting talks with the opposition after another night of violent protests in the capital, Tbilisi. Demonstrators are angry at the ruling party's decision to delay negotiations to join the EU until 2028. Well, Georgia's president has encouraged the protests. She's accusing Russia of trying to scuttle the former Soviet republic's goal to join the EU and NATO. And later today, don't miss our interview with the Georgian president. Now, NATO foreign ministers meet in Brussels today with the war in Ukraine firmly in focus. This comes after several recent visits by European leaders to Kyiv as they look to show their support. For more on all of this, let's get to Bloomberg's Oliver Crick in Berlin. Ollie, good morning. So we had the new EU Foreign Affairs Chief and Council President Kyiv at the weekend, followed by Olaf Scholz. Is Europe succeeding at all in convincing Ukraine that its support will continue?
Yeah, Francine, I think that it is succeeding in convincing Ukraine that Europe's support will continue, whether it's from Germany and overall from the other EU countries. I think the question remains, what is that really worth in the scheme of a war that really has been the main protagonist in terms of support for Ukraine, the United States? We had Olaf Scholz, the Chancellor of Germany, standing alongside Volodymyr Zelensky yesterday, speaking about basically saying that Europe has the staying power to be there to the very end, really reiterating what he has said from the very beginning. What makes it a little bit awkward is that though Germany has been the biggest supporter, and Olaf Scholz a big supporter and contributor to the efforts in Ukraine, whether that's military hardware or financial support, he has been very reticent to go all the way in terms of actually delivering the hardware that Zelensky has been asking for. He has, for example, not gone as far as President Joe Biden with the long-range missiles, which Zelensky has been talking about for a very long time. And in fact, Scholz has made it a real centerpiece of his election campaign, saying that he is the kind of chancellor that will not escalate the conflict and basically will not bring these weapons to Ukraine. And so again, we hear from him that he'll be there till the very end. But the real question is, what is it worth? There is a sort of sense that as far as it goes with the Europeans, they're paying for some of the gas, but they're really not driving the car. At the end of the day, even Zelensky has said it, that Ukraine will stand or fall by U.S. support.
Now, a much less certain picture when, of course, it comes to the U.S. What should we expect to hear from Blinken a little bit later?
Yeah, so listen, he's going to be attending this NATO meeting. It will be the sort of last high-level NATO meeting of this administration, and I suspect it's going to feel a little bit like the last meeting of this administration. We should say there has been, of course, the sort of Biden blitz of trying to get all of this support to Zelensky before the administration runs out, and it's sort of waning last few weeks and months. There has been an additional support package overnight from the Pentagon of $725 million, additional landmines, and of course, remember, Biden has already rushed through those long-range missile permissions to strike within Russia. He has talked about $5 billion worth of debt forgiveness. He has sanctioned Gazprom Bank. But again, what it comes down to is what the Trump administration will take, what stance they will take on the question of Ukraine. We got, Francine, a really crucial, I think, hint into that this week with the appointment of the retired Army General Keith Kellogg to basically take over and manage the relationship between Russia and Ukraine. And Kellogg has written about in the past what his architecture would be for a solution to this crisis in Ukraine. And it amounts to basically this. There's going to be a sort of setup fight by Donald Trump to drive both Putin and Zelensky to the negotiating table. If either one of them refuses, if Zelensky refuses to go, then that means that U.S. support is withdrawn from Ukraine. If Putin refuses, that means that support will be augmented to Ukraine. So that is, again, not yet Trump doctrine or policy, but that is what the person that Trump has elected to basically put in charge of this relationship, how he has seen sort of to solve this question, the question of the Ukraine conflict going forward, which, as we know, Trump wants to swiftly resolve within very sort of short order of becoming president.
Ollie, thanks so much. Oliver Crook there in Berlin. Now, coming up, U.S. President Joe Biden arrives in Angola in what will be likely his last overseas trip as president. We'll discuss the details of the visit next. This is Bloomberg. Well, China says it will ramp up controls preventing materials being exported to the U.S. that have military uses. Now, the move comes after the U.S. tightened restrictions on China's access to vital components for chips and AI. Joining us now is Bloomberg's Peter Elstrom, executive editor for Global Tech. So, Peter, thank you so much for joining us. I mean, this was a big announcement. What did we learn?
Yeah, well, first of all, the Biden administration is trying to finish up a couple of these last things that they wanted to do before they leave office and they turn over the White House to Trump in particular. They've been quite strict in terms of their export controls on China, and now they're stepping that up. We saw these formal steps now to blacklist 140 companies. They're putting restrictions on these AI memory chips also. And now we're seeing China retaliate. They're talking about restricting gallium and germanium. They had talked about restrictions last year. They had actually required that companies apply for licenses to be able to send these outside of the country. Now what we're seeing is there's a presumption that they're not going to grant those kinds of export licenses at all. So it is a tit for tat. It's a little bit of a step up in these tensions, could create some additional tensions between the two countries.
How will it affect U.S.-China relations?
Well, it complicates things, certainly. I mean, we're seeing the tensions escalate between the two countries. This is a Biden administration policy. Again, they blacklisted 140 companies. They've already been very tough on the Chinese chip industry in particular. And Beijing, under Xi Jinping, has been even more determined to build their own domestic capabilities. So we've seen them pour billions of dollars into their own chip industry. They're trying to gain that independence so that they won't be under the thumb of the United States. It complicates it for the Trump administration as they're coming in. It takes away one of the options for them.
So what does that mean? I mean, timing I find quite significant, right? Because we're in these 3 months where Joe Biden is basically a lame duck. Does it mean that Trump has to escalate, or do we not really know what he plans to do?
He is. Well, Trump has said that his favorite word in the English language is tariffs. So he's focused in another direction than what the Biden administration did here. I think the Biden administration wanted to finish up a couple of these things, but you're exactly right. They're squeezing in some of these policies that are going to put the U.S. in a certain position. Trump will now have to reassess whether he's going to stick with those positions or he's going to move in another direction. We know a bit about what the tariffs are going to be like, but we don't know how it's going to affect these kinds of policies on chips in particular.
Peter, thank you so much. As always, Peter Elstrom, there, Bloomberg's executive editor for Global Tech. Now, Joe Biden is also in Angola for what may be his last overseas visit as U.S. president. Bloomberg's Africa correspondent Jennifer Zabazaja is in Luanda for us. Jen, thank you again for joining us. So what are the tangible outcomes from Biden's visit?
Right. So, Fran, hi to you. I mean, really the focus is going to be on non-oil investment here, and that's from both sides. I mean, when we speak from the U.S. perspective, the U.S. has been investing for decades here in Angola. And from Angola's perspective, I mean, almost 90% of their export revenue has relied on oil in the past few decades. And so both sides are looking to really diversify what that relationship looks like and what that investment relationship looks like. And in particular, the focus for this trip for President Biden and the U.S. administration and Angola is on infrastructure. And that looks differently depending on where you focus. There's been a lot of focus, of course, on the Lobito corridor, which is a corridor very key to critical minerals that are going to be needed for the transition. But then there's also the airport that Angola is looking to privatize. There's also the state-owned airline that they have talked about looking for a private buyer. And so this is really about private investment. And we actually spoke yesterday, Fran, with the transport minister for Angola, and he said he is open to any and all partners. Take a listen to what he said.
Irrespectively of being Chinese or US or European, as long as we can deploy the infrastructure and put it available for our communities and for our people, we are fine. The issue is we cannot jeopardize our fiscal sustainability and debt sustainability because we need to rush.
And Fran, that was just a bit of the conversation we had with him. Just speaking about this, I mean, much of the infrastructure investment for Angola in the past has come from China. When you look at sub-Saharan Africa, Angola is one of the most indebted countries. And so they are looking to diversify their partners. The U.S. administration has committed billions of dollars to a number of projects in the country. So potentially we see more announcements and some tangible outcomes, as you mentioned, coming out today and over the next few days to various parts of this economy and hopefully beneficial to both countries.
Jen, thank you so much. Jennifer Zabazaja there in Angola with a very, what we think is the latest, of course, overseas trip for Joe Biden. A couple of things that we need to watch out for. Of course, French lawmakers will vote Wednesday, tomorrow, on toppling the government. They will hold a no-confidence vote with Marine Le Pen's National Rally and left-wing coalition expected to join forces to topple the government. Now, of course, the government's collapse would also mean that this is the shortest tenure for a premier since France's Fifth Republic was founded in 1958. It would lead to uncertainty, potential economic consequences, and the one thing we're watching is not only the euro level, but also the spread between French bonds and German bonds. Up next, Bloomberg Brief, Danny Berger in New York, and this is Bloomberg.